Welcome. In this video, we will show you how to access the People application and configure the initial settings to get started. To access People, go to the Ticiservice's website and enter your username and password on the login page. If you have a Google account, no problem. We fully support Google credentials, making the process even easier. Don't have an account yet? No worries. You can create one by clicking the Register button. Once you log in, you will be directed straight to the Ticiservice portal. Once in the portal, simply click on People. When logging in for the first time, you will be presented with the Getting Started page, a step-by-step guide designed to help you quickly configure the system. The Getting Started guide walks you through a simple configuration process with 10 essential steps to tailor People to your company's needs. No need to worry. Some settings are already pre-configured to make the process even faster. Remember that all settings configured during this phase can be modified anytime by accessing the Settings menu within the application. Once the initial configuration is complete, you can dive straight into setting up your system. Let's start with the first step and configure your settings in People. Step 1. Configuring People settings. In this section, we'll guide you through configuring the core settings for People. Let's take a look at the different options available. Payroll section. First, let's set up the payroll information. Enter your company's IBAN in the designated field. This is the international bank account number used for payroll transactions. Next, provide your company's BIC, also known as the SWIFT code. This ensures smooth international transactions with your bank. Notifications section. Here, you can decide how notifications will work for specific actions within People. Notifications are always available in the app, but you can choose to receive them via email as well. Absences notification email. Enable this to receive email notifications about absences. These emails will inform you about your own absences or those that require your approval. Time recordings notification email. Turn this on to receive email notifications about time recordings. You'll be notified of your entries or any requiring your approval. Expenses notification email. Activate this option to get email notifications for expense submissions. This applies to your own expenses or those waiting for your approval. Child allowance change email. This option is specific to HR directors. If you belong to this role, enabling this will send email alerts when there are changes to child allowance details. This ensures HR directors stay informed about these updates. Remember, you'll always see in-app notifications by default. Show Getting Started page. This toggle lets you control whether the Getting Started page is displayed when launching People. Once the setup is completed, this option will automatically deactivate. However, you can turn it back on if you need to revisit the guide. General Terms and Conditions section. In this section, you can customize the general terms and conditions or your organization's privacy policy using the rich text editor. Replace the placeholder content with your company's specific policies. Remember, this section also serves for open positions, so ensure your privacy policy is clear and up to date. That's it for step 1. Once these settings are configured, you'll be ready to move on to the next step. Let's continue. Step 2. Configuring shifts. Shifts allow you to define work schedules by specifying start and end times, durations, and even overnight transitions using the Day Delta feature. Whether you have fixed schedules like morning, afternoon, or night shifts, or flexible durations, this section provides full control to meet your organizational needs. To create a new shift, start by clicking the New button on the Shifts page. This will open the shift creation form where you can enter all the necessary details. First, give your shift a clear and unique name, like morning, afternoon, or night, to make it easily distinguishable from others. Next, choose the shift type. If your shift has specific start and end times, select time. Otherwise, if the shift is defined by a total number of hours without specifying exact times, select duration. For time-based shifts, enter the start and end times in the fields labeled Time From and Time To. Be sure to use the right time format, for example, 6:15 for a morning start time. If the shift extends past midnight, use the Day Delta field to indicate this. For example, if your shift starts at 10 p.m. and ends at 6 a.m. the next day, set the Day Delta to 1. If it ends on the same day, leave it as 0. Now decide the shift's status. If it's ready to be assigned to employees, select Active. If you're creating it for future use or testing, set it to Inactive. Before saving, you can also review the changelog section to see any updates made to the shift. Once all the details are entered, click OK to save the shift, or cancel if you need to start over. Your newly created shift will now appear in the shifts list, ready to be used in your scheduling. Creating shifts has never been so simple. Let's move on to the next step. Step 3. Configuring departments. In this step, we'll walk you through configuring your company's departments using people. Departments are a key part of your organization's structure. They represent different areas of responsibility, such as human resources, administration, IT, or marketing. By defining departments, you can assign employees, manage teams effectively, and align each department with a specific cost center for budget and financial tracking. To create a new department, simply click the New button on the department's page. In the form that appears, fill in the necessary details. Start by entering a name for the department. This should clearly represent its function, like finance and accounting or customer service. Next, assign an owner if one is available. If not, you can add the owner later after adding employees. The owner is responsible for managing the department's operations and performance. Then, link the department to a cost center, which is used for budgeting and tracking financial activities. You can use the plus button to create new cost centers. Now, set the department's status to either active or inactive. Active departments are available for assignments, while inactive ones are archived but retain historical data for reference. You can review the changelog to track any modifications made to the department, including details on who made the change and when it was updated. If you need to edit an existing department, click the pencil icon next to the department name. Once all the details are complete, click OK to save your department, or Cancel to discard changes and close the form. With departments set up, you'll have a more organized structure that ensures teams are clearly defined, responsibilities are properly allocated, and financial tracking is aligned with your organization's goals. That's it for Step 3. Let's continue. Step 4. Regimes. In this step, we'll create a new regime specifically for laborers with hourly pay. Regimes are essential for defining the working conditions, rules, and salary structures that apply consistently to employees using this regime. They allow you to configure all the rules that remain unchanged between employees within the same group. Let's begin by clicking the New button on the regime screen. This opens a form where you can define all the necessary details for the new regime. First, assign a descriptive name to the regime. In this example, we'll call it Laborers. This name will make it easy to identify and assign to the appropriate employees. Next, toggle the Paid Hourly option to specify that the salary for this regime will be calculated on an hourly basis, which is ideal for laborers or roles with flexible working hours. Now, define the weekly hours. For laborers, we'll set this to 40 hours per week, reflecting the standard full-time working schedule. You can adjust this based on your company's policies or applicable labor regulations. The day rate formula section allows you to calculate daily wages or benefits. Using predefined variables and operators, you can customize formulas to fit your company's needs. For this example, we'll use the default formula, but we'll revisit this in future steps if we need more customization. In the Limits section, we'll define the boundaries for time bank, overtime hours, and vacation days for the laborers regime. These limits determine what will be included in payroll calculations and ensure that only valid hours and days are considered. For laborers, let's start with the time bank. Since laborers don't use a time bank, we'll set both the minimum and maximum hours to 0. This ensures that no hours are accumulated or carried over for payroll purposes. Next, we'll configure overtime hours. For this regime, we'll set the minimum overtime to 0 and the maximum to 10 hours. This means that any overtime beyond 10 hours will not be included in the salary calculation, aligning with company policies. Finally, we'll set the limits for vacation days. Here, we'll allow between 0 and 25 days of vacation. This ensures that no more than 25 days are accounted for in payroll or benefits. With these settings, the laborer's regime is configured to meet specific requirements, ensuring accurate tracking and compliance with your policies. Once the limits are set, you can proceed by clicking OK to save the current progress and continue configuring the remaining sections of the regime. Now let's move on to configuring the time recording intervals, which define the breaks for employees. For laborers working in shifts, we'll set up 60-minute breaks for each shift. These breaks are flexible, allowing workers to take them any time within the specified interval. To begin, click the New button to create a new interval. We'll start with the first shift, which runs from 6 o'clock to 14 o'clock. For this, set the type to regular. Next, define the valid from and valid to dates to indicate when this interval will be applicable. Then, set the time from field to 10 o'clock and the time to field to 11 o'clock. This defines a 1-hour break in the middle of the shift. Finally, specify the break duration as 60 minutes. Once done, click OK to save. Repeat the process for the second shift, which runs from 14 o'clock to 22 o'clock. Again, set the type to regular and configure the break time between 18 o'clock and 19 o'clock with a 60-minute duration. Save the configuration once complete. Lastly, set up the third shift, which runs from 22 o'clock to 6 o'clock. For this shift, define the break interval from 2 o'clock to 3 o'clock, ensuring the break duration is 60 minutes as before. Save the changes. Once all 3 intervals are configured, you'll have breaks set up for every shift, ensuring compliance with company policies and allowing employees to take their pauses within the designated times. You can review or modify these settings later if needed by clicking on the pencil icon next to each interval. Now let's move on to configuring company insurances, which define the different insurance policies available to employees. These policies ensure that salary calculations correctly account for situations such as workplace accidents, maternity leave, non-occupational injuries, and illness. The advanced formula calculations support the insurance rules, ensuring compliance with company policies and legal requirements. It is important to note that these values are provided as an example. The actual configuration depends on the company's insurance policies and the local labor laws in effect. HR managers responsible for configuring the system in People must be familiar with the applicable insurance regulations to ensure accurate implementation. To begin, click New to create a new insurance entry. Let's start with occupational accident insurance, which covers professional injuries. Set the absence type to professional injuries and define the coverage percentage at 80%. The waiting period days should be set to 3, meaning the employee must wait 3 days before receiving coverage. The waiting period percentage is 100%, which means there is regular salary coverage during the waiting period. The day rate formula ensures that the salary calculation is adjusted correctly, taking into account annual salary and any applicable benefits according to the local law. This formula calculates the daily salary, considering both the employee's annual salary and any allowances for dependents. First, we take the annual salary, then we add the dependent allowance, but since this is usually given as a monthly amount, we multiply it by 12 to convert it into a yearly value. Once we have the total income, we divide it by 365 days to get the daily compensation amount. This formula is useful when an insurance policy includes benefits for dependents and needs to account for them in salary adjustments. Is determinant option, when enabled, ensures that the indemnity is declared as taxable income. Is mandatory option is for informational purposes only and does not affect recalculations. Once all values are set, click OK to save. Next, we configure maternity insurance. The absence type is set to maternity, with an 80% coverage percentage and 0 waiting period days, meaning the coverage starts immediately. The duration days are set to 98 to match the standard maternity leave period of 14 weeks. The formula used for salary calculations is conditional and applies different salary calculations based on the employee's income. First, it takes 80% of the annual salary and checks if that amount is greater than $80,200. If it is, the daily rate is fixed at $220 per day. Otherwise, the salary is simply divided by 360 days. This formula is useful when there's a maximum daily allowance, meaning that even if an employee earns more, the insurance will only cover a fixed amount. Once configured, we save the entry. For non-occupational accident insurance, we follow a similar approach. The absence type is set to non-professional injuries with an 80% coverage percentage and a waiting period of 3 days, meaning the employee must wait 3 days before receiving coverage. The waiting period percentage is 100%, so regular payments are made during that time. The day rate formula adjusts salary calculations by applying a specific condition for high-income employees. If the annual salary exceeds $148,200, then instead of calculating the daily salary normally, it caps the salary at $148,200 and takes 80% of it, dividing by 365 to get the daily amount. If the salary is below this threshold, the formula considers both the salary and dependent allowances. This type of formula ensures that employees with very high salaries do not receive unlimited insurance compensation and that a cap is applied according to insurance rules. Finally, we configure illness insurance. The absence type is set to illness with an 80% coverage percentage and 0 waiting period days, meaning it applies immediately when an employee falls under this category. The day rate formula ensures that the correct salary adjustments are made when an employee is on sick leave. This is the simplest formula. It just takes the annual salary and divides it by 365 days, giving a straightforward daily salary calculation. This is commonly used when there are no special rules, caps, or additional benefits affecting the compensation. After verifying the settings, we save the entry. With these insurances configured, the payroll system will automatically apply the correct calculations when employees fall under these categories. If needed, HR managers can adjust the values to ensure they align with company policies and local regulations. With company insurances now set up, let's move on to the next step. Compensations and benefits. This section allows you to configure additional bonuses or benefits associated with the regime, whether it's performance bonuses, transportation allowances, or other benefits. This is where you define the rules that apply uniformly to all employees under the regime. One of the most crucial aspects of this setup is the sort field. This determines the calculation order of compensation items within payroll. If one compensation depends on another, its sort value must be higher than the item it relies on. Otherwise, the required value won't be available because it has not been calculated yet. To help users manage this, People provides a color-coded indicator system in the formula editor. When a variable appears in solid green, it means the value is already calculated and available for use in the formula. If a variable is in solid red, it means the value cannot be used because it hasn't been calculated yet. This happens when the sort order is incorrect, meaning the required value is processed later instead of before it. By carefully managing sort values, you ensure that each compensation is calculated at the right moment and can be used in subsequent formulas without errors. To start, click New to create a new entry. To create a bonus, start by selecting Income as the type, then name it Bonus, add a space, and include the variable Last Year. Since this bonus is taxable, enable the Subject to Taxation toggle. If employees should receive only a partial bonus based on their working period, enable Can Be Partial. Set the period type to month and assign period number 3, meaning this bonus will be paid in March. The formula used is bonus percentage divided by annual salary, then multiplied by 100, which calculates the bonus as a percentage of the annual salary. The sort value for this entry should be lower than any other compensation that depends on this bonus amount in its own calculation. Once everything is set, click OK to save. Now that laborers are paid hourly, we need to set up allowances for public holidays and vacations. The process is the same as for bonuses, but this time the formula will be different. To begin, click New to create a new entry. In this example, we will configure the public holiday allowance. Start by naming this entry Public Holiday Allowance and selecting Income as the type. Enable subject to taxation, since this allowance must be included in the total taxable income. Also, turn on can be partial to ensure that the allowance is calculated proportionally if the employee has not worked the full period. The sort value is crucial in this configuration. Since public holiday allowance is used in other compensations, such as the 13th month salary, it must be processed first. To ensure this, its sort number must be lower than that of any dependent entry. This guarantees that all calculations are performed in the correct sequence, preventing errors in salary computation. For the formula, we use adjusted period salary to ensure that the calculation considers the correct salary adjustments for each period. To determine the correct percentage, we divide these days by the total number of working days in a year. The calculation follows this logic. 9 public holidays divided by 251 working days, which is derived from 260 total workdays in a year minus 9 holidays. The result, multiplied by 100, gives us 3.6%. This percentage represents the proportional compensation that will be applied to each pay period. This value should be entered in the employee percent field to ensure that the correct percentage is applied based on the employee's salary. Once everything is set, click OK to save the entry. With public holiday allowances configured, we can now proceed to set up vacation allowance, following a similar approach but with a different percentage and calculation method. Since this is an allowance, its setup process is similar to public holiday allowance, but it uses a different percentage and formula. Click New to create a new entry. Select Income as the type and name it Vacation Allowance. Enable subject to taxation, since this allowance must be included in the total taxable income. For the sort value, we must ensure this allowance is processed after public holiday allowance, but before any compensation that depends on it. Since public holiday allowance has a sort value of 11, and we have assigned 21 to this entry, everything is correctly ordered. Additionally, public holiday allowance is fully green, indicating that it has already been calculated and can be used in the formula. The formula applied here is adjusted period salary plus public holiday allowance, ensuring that vacation allowance is calculated correctly. For the percentage, we need to determine how much of the salary corresponds to vacation days. The calculation follows this logic. 20 vacation days divided by 240 working days, which comes from 260 annual working days minus 20 vacation days. The result, multiplied by 100, gives us 8.33%. This percentage is entered in the employee percent field. Once all the values are set, click OK to save. This allowance is now ready to be included in salary calculations, ensuring that employees receive the correct compensation for vacation days. Now click New to create the final entry. Let's configure the 13th month salary. Choose Income as the type. Set the name as 13th month salary, add a space, and include the variable year. Since this salary is subject to taxation, enable the toggle. The formula used includes adjusted period salary, ensuring that the compensation correctly reflects the laborer's earnings each month. Additionally, it incorporates both the public holiday allowance and the vacation allowance, which is why they were configured first. Their sort values are lower, allowing this calculation to use their results. For hourly laborers, the 13th month salary is distributed monthly instead of being paid in a single installment at the end of the year. The percentage is set to 8.33% derived from the Formula 1 divided by 12, multiplied by 100. This percentage is entered in the employee percent field and ensures that the equivalent of one extra monthly salary is evenly spread across all 12 months of the year. Once all the values are set, click OK to save. Managing compensations and benefits correctly ensures that salaries, bonuses, and allowances are calculated accurately and in compliance with company policies. Now let's move on to contribution rules, the final step in configuring the regime. Contribution rules define deductions related to Social Security, taxes, and other mandatory contributions, ensuring that payroll calculations align with local regulations and company policies. In this section, we configure various contributions that may apply based on specific conditions such as employee age, income level, and work duration. These rules ensure that deductions are correctly applied to salaries, maintaining compliance and accuracy. Let's configure the old age and survivors insurance, disability insurance, and loss of earnings insurance contribution rule. This is one of the key deductions that apply to laborers and must be correctly set up to ensure compliance with legal and company policies. To begin, click New to create a new entry. Ensure the type is set to contribution, as this is a mandatory deduction. In the name field, enter OASI/DI/APG to clearly label the rule. Next, ensure the Can Be Partial toggle is enabled. This allows the contribution to be applied proportionally when an employee joins or leaves the company in the middle of a pay period. The period type is set to month, meaning this contribution will be calculated on a monthly basis. The sort value is set to 41 automatically. This determines the order in which this contribution is calculated. The formula used in this rule ensures that the deduction is applied correctly based on the employee's age and income. The logic is as follows. If the employee is over 65 years old and has a determined income lower than $1,400, the contribution is not applied. If the employee is over 65 years old, an exemption of $1,400 is deducted from the determined income before calculating the contribution. Otherwise, the contribution applies to the full determined income. This formula ensures that workers above a certain age receive the appropriate exemptions, aligning with Social Security rules. In the employee percent and employer percent fields, enter 5.3%. This defines the shared contribution between the worker and the employer, ensuring that both parties fulfill their obligations. Once all settings are confirmed, click OK to save the contribution rule. Now let's move on to configuring Unemployment Insurance Tier 1, which ensures compliance with the local unemployment contribution rules. This deduction is applied based on specific employee conditions such as gender, age, and income level. To begin, click New to create a new contribution rule. Make sure the type is set to contribution. In the name field, enter Unemployment Insurance Tier 1. Next, ensure the Can Be Partial toggle is enabled. This allows the contribution to be adjusted proportionally when an employee joins or leaves the company in the middle of a pay period. The period type is set to month, meaning this contribution is calculated monthly. The sort value is set to 51. In this case, a sort value of 51 is acceptable because there are no dependencies on variables that have not yet been calculated. It is also important to note that no variables are marked in full red, which confirms that all necessary values are already available at this stage of the calculation. Now let's configure the formula for this contribution. This formula ensures that only employees who meet specific conditions will have this deduction applied. If the employee is male, under 65 years old, and has a determined income of $12,350 or more, the contribution is calculated on $12,350 as the base. If the employee is female, under 64 years old, and has a determined income of $12,350 or more, the contribution is also based on $12,350. If the employee is male and aged 65 or older, no contribution is applied. If the employee is female and aged 64 or older, no contribution is applied. If the annual salary is less than $2,300, the contribution is not applied. In all other cases, the contribution is calculated based on the determined income. This structured approach ensures that employees below the required income threshold or above the retirement age are exempt from this contribution, following legal requirements. In the employee percent and employer percent fields, enter 1.1%. This ensures that both the employer and employee contribute equally to this unemployment insurance. Once all settings are verified, click OK to save the contribution rule. Now, let's configure the contribution rule for non-professional injuries. This contribution ensures that employees are covered for injuries that occur outside the workplace. Employers cover the premiums for insurance against professional injuries and illness, while employees generally pay the premiums for non-professional injuries. However, the employer initially covers the full premium and then deducts the employee's share directly from their wages. To start, click New to create a new entry. Set the type to contribution. In the name field, enter non-professional injuries to clearly label the rule. The formula used ensures that the deduction is correctly calculated based on the employee's relevant income. If the relevant income is equal to or greater than $12,350, then the contribution is calculated on this amount. Otherwise, the contribution is based on the relevant income minus any maternity compensation. This ensures that employees who have received maternity benefits have the correct contribution applied. The employee percent is set to 2.13%, ensuring that the worker is in compliance with local law requirements. Once all settings are confirmed, click OK to save the contribution rule. Now, let's configure the contribution rule for loss of earnings insurance. This contribution provides financial support in cases where an employee temporarily loses their ability to earn wages due to specific conditions, such as illness, ensuring continued income stability. To begin, click New to create a new entry. Set the type to contribution, and in the name field, enter loss of earnings insurance to clearly label the rule. The formula ensures that the deduction is correctly applied based on two key conditions. If the contract duration is less than 90 days, the contribution is not applied and the employee is not covered according to local law. This prevents temporary or short-term contracts from being included in this insurance. If the employee is under 65 years old and has an annual salary equal to or above $2,300, then the contribution is based on the relevant income. Otherwise, the contribution is not applied. This logic ensures that only employees who meet the necessary conditions are included in this contribution scheme. The employee percent and employer percent fields are both set to 0.9%, ensuring that the contribution is equally shared between the worker and the employer in compliance with local regulations. Once all settings are confirmed, click OK to save the contribution rule. Now, let's configure the final contribution rule, Unemployment Insurance Tier 2. This contribution applies only to employees whose income exceeds a certain threshold, ensuring compliance with unemployment insurance regulations. To begin, click New to create a new entry. Set the type to contribution, and in the name field, enter Unemployment Insurance Tier 2 to clearly label the rule. The formula ensures that the deduction is correctly applied based on gender, age, and income level. If the employee is male, under 65 years old, and has a relevant income greater than $12,350, the contribution is calculated on the portion of income exceeding this threshold. If the employee is female, under 64 years old, and has a relevant income greater than $12,350, the same rule applies. Otherwise, the contribution is not applied. This logic ensures that only employees who surpass the set income threshold contribute to the second tier of unemployment insurance. In the employee percent and employer percent fields, enter 0.5%, ensuring that the contribution is equally shared between the worker and the employer in compliance with local regulations. Once all settings are confirmed, click OK to save the contribution rule. With all the contribution rules in place, the regime setup is now complete. This ensures that payroll deductions are calculated accurately, comply with legal requirements, and are structured correctly for every laborer. The entire configuration guarantees a seamless payroll process, aligning with company policies and local regulations while ensuring fairness and precision in every calculation. These rules will continue to function automatically for payroll processing, applying to all employees under this regime. Adjustments will only be necessary if there are changes in legislation or updates to insurance agreements. Otherwise, the setup remains stable, requiring no further modifications. When you're ready, click OK to save the regime. It will now appear in the list, ready to be assigned to employees who fit these criteria. That's it for Step 4. Step 5. Now, let's move on to creating a new employee manually. While it is possible to import employees in bulk using the Mass Upload button, in this section, we will focus on adding an employee step by step. To begin, navigate to the Employees section and click the New button to open the employee creation form. Here, you will need to enter various details that define the employee's profile within the system. First, in the User field, select the employee from the drop-down list. This field displays the names of all available users in the system. If the employee is not listed, they must be added first. Now, let's create a new user. To begin, enter the email address in the designated field. This will serve as the user's unique identifier and primary contact method. Next, input the first name and last name to correctly register the user's identity. Proceed by selecting the birth date using the calendar picker. This information is important for records and compliance with legal regulations. Then specify the user's country and city. These fields ensure that the user is correctly associated with the proper location for tax and administrative purposes. Next, enter the street address, postal code, and state or province. To personalize the profile, you can upload a profile picture. Simply drag and drop an image into the designated area or click to browse and select a file. Once all required fields are completed, click OK to save the user profile. This user can now be assigned as an employee in the system. Next, select the manager, who is the direct supervisor responsible for overseeing the employee's work. Then, choose the department where the employee will be working. Proceed by entering the position, which specifies the employee's job title, ensuring clarity in their role within the organization. In the Contract Type field, select the appropriate contract category. Options may include permanent, temporary, or probationary, depending on the nature of employment. Specify the employee's nationality and work province to ensure compliance with labor laws and tax regulations based on the employee's working location. This section may also be relevant for child allowance eligibility in some jurisdictions. Enter the employee's birth date and select their gender from the drop-down menu. Additionally, define their marital status, indicating whether they are single, married, or have another status. If applicable, provide details for the visa status, which is important for employees requiring work permits. For tax and benefits purposes, enter the employee's Social Security number. Additionally, assign a badge ID, which serves as an identification number within the company's time and attendance system. Enter the employee's personal email and phone number. These contact details allow for direct communication and also enable employees to receive payroll PDFs via email. Finally, set the status of the employee. If they are currently employed and active, select Active. Otherwise, choose Inactive for employees who are no longer working with the company. Once all required fields are completed, click OK to save the new employee profile. With the employee successfully created, additional details can be managed within different sections. Now, we can start setting up a regime for this new employee. Click on the New Regime button, then select one of the regimes we have created. Set the start and end date of the contract, specify the work percentage, and choose the days the employee will work. Since this is an employee and not a laborer, I will select only one 8-hour shift, as this employee is not paid by the hour. Once everything is set, click OK. On this screen, we can also assign the same regime to multiple employees. In this case, I will proceed by clicking OK. The regime has been created. Now we need to set the salary. Click on Salaries, then select New Salary. Here we enter a monthly salary of $5,000 as an example and apply a 3% bonus. Next, we assign vacation days to the new employee. Click on New button. This year, we set 25 vacation days. Here as well, vacations can be assigned to multiple users at the same time. Now, we need to create the bank details for salary payments. Enter all the bank details, including the bank name, validity period of the account, the IBAN, and the BIC code and bank address. Once done, click OK. At this point, we configure the contributions. Click on Contribution Rules, then select New Contribution Rule. Now we enter the second pillar pension contribution for the employee. In this example, we use the formula adjusted period salary and apply a percentage of 9.5% for both the employee and the employer. Once done, click OK. If the employee has children, we add them under dependents. Here, we define the child allowance rules and create the dependent records. To add a child, press New Dependent. In the payroll name field, enter child allowance to specify the type of benefit. Fill in the dependent's first name and last name and enter their social security number. Next, provide the date of birth. If the child is adopted, you can also enter the date of adoption. Select their nationality and gender. If the dependent is a student or unable to earn, you can enable the respective toggle. The system automatically calculates the child allowance amount. Once all details are entered, click OK to save the dependent. OK, the employee has been successfully created. Now we can click OK and move forward. Step 6. Roles. In this section, roles are divided into two categories: system roles, which are predefined, and custom roles, which can be created if needed. By default, all necessary system roles are already configured, so no changes are required for the program to function properly. However, users must be assigned to their respective roles. To do this, click on the folder with the plus icon next to the role. A selection window will open where you can choose users. Move them to the right to assign them to the role or to the left to remove them. Once finished, click OK to save the changes. If you need to create a new role, click New. Enter a name like HR Trainee and assign users as needed. Click OK to save the role. We will see in the next step how to assign authorizations to this new role. Once the roles are set, click Next to continue to the next step. Step 7. Authorizations. The authorizations for system roles are already pre-configured, but can still be modified if needed. For the new role we created, we can assign specific permissions. In this case, since the role is for an HR trainee, we will grant access to managed training sessions. Additionally, we will allow the role to work on open positions and view statistics. Once all necessary permissions have been assigned, click Next to proceed to the next step. Step 8. Time recording types. Time recording types are already pre-configured and do not require any modifications. However, if needed, new types can be created. In this case, we can proceed directly to the next step. Step 9. Absence types. Absence types are also pre-configured, so no changes are necessary. If there are no specific requirements, we can simply move forward. Step 10. Expense types. The final step covers expense categories, which are already set up. Unless modifications or additional categories are needed, we can click Finish. Congratulations! You have successfully configured people, and you can now manage human resources more efficiently.